I guess on behalf of myself, Barry and Joe, thanks for having us here. We're really excited to do this. This is really a hot topic right now. It's something a lot of people, we've been getting tons of questions. A lot of people reach out. So we're happy to be here. We're happy to do this. Just John, in terms of what you had mentioned to put questions in the chat, if we could try to have people put questions in the Q&A, that would be great. Let's try to utilize the Q&A. At least we could filter questions, and then we could hold questions in there for later that we want to touch on live for the last 10, 15 minutes. Alternatively, if you want to just raise your hand, we'll wait till the end probably to call on everyone.
Okay.
So on today's agenda, we're going to cover a couple of interesting topics. We're going to cover PPP in the news really briefly, some key concepts and strategies, including the 8 versus 24 weeks, certain of the safe harbors. We're going to give a quick update on loans over 2 million. Which reminds me, Collier, can you just put forward that Q&A question? For everyone on the call, Collier is putting forth a Q&A question. It's just a really quick question. What size PPP loan did you receive? Based on these answers, we're going to try to tailor this presentation as best possible because a couple of these factors really depend on the size of the loan. So if everyone could just answer that question really quick. Collier, once you have a couple of once you have about 15 or so responses, just let me know.
And just so everyone knows, these responses are anonymous.
Yep. How many are in, Collier?
We have 9 right now.
Okay.
And it seems like it's skewing toward the 150K to 2 million.
Okay, great. Do we have any over 2 million?
Not yet.
Okay, great. I'm going to continue. Update on loans over 2 million. That's going to be a brief update, just because if we don't have anyone with those loans, we won't spend too much time there. Changes in ownership and the effect on your PPP application, financial statement reporting, tax effects, and 2020 tax planning guidance. And then finally, we're going to wrap it up with SBA review process and record retention. So to kick this off really quick, PPP in the news. It has been pretty much the hottest topic right now in the accounting finance space, and probably one of the most impactful pieces of the CARES Act as a whole, just because it impacted pretty much every business in the country. Any business, any small business, with under 500 employees. So a couple of key headlines here. I'm not going to cover everything. It's more so here just to give everyone a quick view, but the top headline is really important because a second round of PPP is gaining momentum in Congress. There's a lot of talk right now of potentially a fourth stimulus bill, I guess it would be your third, having a second round of PPP in there. We don't know what's going to end up passing or what the requirements are going to be. From what we've seen so far, there's word out there that they're going to put forth a second round of PPP to businesses potentially under 300 employees who had a certain percentage of a reduction in business in specific quarters between 19 versus 20. So look out for that. A couple of other headlines, a ton of fraud. So there has been a ton of fraud in the PPP space, which is why they've changed this process of the approval process for PPP so much, really to try to cut down on all the fraud. So look out for that second round of PPP, and kind of look out for some of that. We're going to start this off with a couple of general concepts. Now, we are pretty much assuming throughout this that a lot of the really high level general PPP stuff, most of the viewers who are on here know. So we're going to try to cover some of the stuff you haven't heard about throughout. So general concepts, this is going to be, a lot of these concepts are going to be the only time you hear this. If you have detailed questions on some of this stuff, put it in the Q&A. We could talk about it after, or feel free to reach out to us after the webinar. So the first bullet here, as many of us know, loans are eligible for partial or full forgiveness if you spend them on eligible costs during the covered period. Now, we should all know, hopefully, the covered period is going to be either an 8-week or a 24-week period from the day that you receive the PPP funds. That is, the covered period starts on the day that the cash hit your bank account. Now, if you receive the loan before June 5th, you could choose either 8 or 24 weeks. If you received your loan after June 5th, you have to use a 24-week covered period. Next bullet here, about timing of your forgiveness application. We will cover this in a little more detail later on, but essentially your forgiveness application, we say here that it must be submitted, but it really doesn't have to be submitted, but you should submit it no later than 10 months after the end of your covered period in order to defer payments as per the loan terms. So I believe you have up to 2 years to actually submit your forgiveness application, but payments are only deferred for 10 months. So you really want to get it in within that 10-month period after the end of your covered period. For loans that have an unforgiven portion, interest rates are at 1%, very low. That was done purposely. And the loan term is either 2 years or 5 years. If you signed your PPP documents, if you received the loan before June 5th, your loan documents most likely, or they definitely reflect a 2-year loan term. For loans after June 5th, those have a 5-year term. Now you can go to your lender and have them reissue loan documents with a 5-year term. We have seen some cases where banks are giving pushback on that, but just know that you can reach out to your bank to to renegotiate those terms. And finally, the deferral period on the unforgiven portion, it's deferred until the SBA remits forgiveness amount to the lender. So it's really deferred until you finally get that final say from the SBA in terms of your forgiveness. Everyone should probably know this piece. Payroll costs must be at least 60% of your total spend. It can be 100, it can be greater than 60. Basically, you have to spend at least 60% of your PPP on payroll in order to get forgiveness. There are certain other eligible costs you could spend PPP funds on. That's payments of interest on mortgage obligations, rent payments on lease agreements, and certain utility payments. Keep in mind that for all 3 of these, the mortgage, the rent, the utilities have to be in place before February 15, 2020 in order to be eligible for forgiveness. Moving on, costs must be paid or incurred. That's a very interesting concept. It's kind of a quasi-cash accrual method, especially for payroll. Your payroll must be paid during the covered period or incurred during the covered period. For example, if you received your PPP on, let's say, May 1st, and you had a payroll on May 2nd, right? That payroll on May 2nd covers a period prior to when you got the funds, but the fact that you're paying it during your covered period makes it eligible for forgiveness. So just keep that in mind. It was very impactful when it was a purely an 8-week covered period, but with the 24-week covered period, it's a little less impactful, but just keep in mind, it's got to be paid or incurred during the covered period. On the covered period talk, there is an alternative payroll covered period, which is only, the option is there only for those of you who are on biweekly or weekly payroll. And what that alternative payroll covered period is, it says that you could start the covered period in terms of payroll on the first pay period following the disbursement date of your PPP loan. So for example, you got funds on May 1st. Let's say you had a payroll on May 10th. You could start that covered period for payroll only on May 10th. Finally, FTE, which everyone probably has heard a lot about. FTEs are very impactful in this whole process. An FTE is a full-time equivalent employee or a combination of employees that work a total of at least 40 hours per week. So an FTE, a full-time equivalent employee in terms of the SBA and the PPP, is 40 hours a week. Joe, you're up.
Good afternoon, everyone. It's nice to be with you, albeit virtually. I hope everyone's well. Collier, are we still with no one over 2 million?
Let me just check. Yeah, no one over 2 million.
Okay, so what we'll try to do is spin this a different way. So we had prepared in case anybody was. So those that are not over $2 million are not required to file this form that I'm talking about, but it's still worth talking about only because you may be called upon to answer the kind of questions that are on this form. Everybody should be prepared for this. So to give you a little background, in November, this form was produced, and it's called a Loan Necessity Questionnaire. And it sort of rewrites history a little bit, because on your original application for the funds, when you applied back in, let's say, April or May, whenever you applied, you were asked to certify to a specific statement that reads as follows. Current economic uncertainty makes this loan necessary to support the ongoing operations of the applicant. Well, what this form aims to do is to see whether or not you actually had the need for the money. So why do I say it changes history a little bit? Because I say it because initially it was based upon your expectation. So if you honestly felt that you had a real need for this money and you could show that the economy was in a state of doubt, to put it mildly, when you applied, then asking for what actually happened months later, where we may have seen some recovery, at least economically, is, in my mind, rewriting history. And so this questionnaire asks you to how to ascertain how the funds were actually used, what happened to your income. It asks you how the money was spent, and that's hindsight. That's not what was originally done. But again, if you're not required to fill out the form, you don't have to submit this. It's only if you're questioned later on that you would have to, upon a review, that you might have to answer some of these type of questions. So it's good to be familiar with it. I would recommend looking at this form 3509. It might be in our resources at the back of these slides. I think it is. Chris is nodding, so I'm assuming that.
Yes, it is. Yep. We have an
Okay.
appendix in the back of the deck that we'll send
Okay.
out to everyone afterwards.
But some of the questions are kind of troubling, even for those people who are over $2 million. I mean, they ask questions that relate back to March 13th. Now, this law was only passed on March 27th, and people didn't start getting money till April and May at the earliest. So to ask for information about March 13th is, you scratch your head and you wonder why. So anyhow, this application is not going to apply to anyone in this group, apparently. But I think it's wise to know the kind of questions that are being asked. So you should probably look at this and ask yourself, how will this be used? Will it be used to support your request for forgiveness? Will it be used to thwart forgiveness applications? In other words, to block them? Or maybe they just merely want to use this to publish statistics later on to see how money was used as opposed to what was expected. We don't know, but it's interesting to say the least. Barry, next slide, please.
Yep. Yeah, that is a very interesting thing. And also, when people actually applied and received PPP money, you had to sign a loan document, and the loan document may have been with the bank or whoever you borrowed the money with. You may have signed it up with a recourse basis or on a non-recourse basis. And one of the provisions that was subsequently released in just within the last 4 weeks is question and answers dealing with changes of ownership. So if your business had a change in ownership, and there was a lot of companies were scheduled to be purchased before the COVID even was hit, they were in contract. The question is if you had PPP money outstanding, borrowings, and you're selling your business, the question is what happens? Who's responsible for the payment of it? Is it the buyer? Is it the selling company? If you sold all the assets to another company, does the liability accrue to the new buyer or so? So no one really had an answer for that. And they never really addressed it in the loan documents, nor did the SBA address this issue. So they came out, and so a lot of deals, a lot of sale of businesses were on hold, and the SBA and those lawyers who were holding the deals up actually reached out to the SBA, and basically the SBA came up with some guidance that said the following: if you have a 20% or more change in ownership or the ownership interest of the company, including affiliated companies, or the borrower, the PPP borrower, is selling more than 50% of its assets measured by value, or the borrower is going to merge into a new entity. What they basically said is that if you were going to do such a transaction, you would have to reach out and get permission from the borrower, the lender from the bank. And in some cases, if it was a big enough transaction, the lenders would go and ask the SBA for approval on it. And in some cases, the SBA came back and they said, until we determine whether there's forgiveness or not, they're requiring the selling company to actually put money in escrow with the lender until that final determination's been made. So there's a lot of questions that came up, and they came up with some of this guidance. So people can proceed with deals. It may require some escrow amounts, but that's what they basically did, to not hold up deals and go forward with that. We've been seeing it in our practice a few times, and that's what we're recommending our clients to do. Chris, would you like to go over the forgiveness application now?
Sorry about that. I was just on mute.
This is, yeah, I think this is for me to do, actually. So on this forgiveness application, the computation itself, on this slide, we're just trying to simplify this for everybody, because the application form has some computations that take you to worksheets, and you have to do various computations, but this really summarizes it. So for most companies, this is the way it works, what you're seeing here on the screen. You're going to take your eligible payroll costs and those costs that are non-payroll costs that Chris talked about before, and then subtract this wage reduction. Wage reduction applies only when the rate of pay is actually reduced by more than 25% from the pre-COVID levels. So it's usually not applicable in most cases. It's more likely to be scaling down hours, which goes to the FTE computation. But it does apply from time to time, and it's usually not that impactful to begin with, not as much as the percentage that you would find from FTE. So when you subtract that out, it comes to the adjusted eligible costs, and you're going to multiply that times the FTE reduction and come up with the FTE reduction quotient. So supposing you reduced your FTEs by 20%, that leaves you with a reduction quotient of 80%. And so you're going to then take those eligible costs and multiply it by 80% to see what your possible forgiveness amount is. And actually, I say possible because you still need to compare that to the total loan amount. You can't take more than the total. And you must also compare that to the payroll cost divided by 60%, because as Chris mentioned earlier, you need to spend at least 60% on payroll. So you take the least of those three computations, and that actually is your total forgiveness amount. For many people, that will be just what you see on the sheet, though, because it's basically your reduction quotient times the eligible costs. Then you're going to subtract the EIDL grant. Many people applied for this separate grant from the SBA, and the SBA says, well, okay, it's good you got that money, but you must subtract that from the forgiveness amount, which means that effectively that amount would have to be repaid.
And Joe, just if I could jump in there for a second.
Sure.
The EIDL grant piece of it, I think, is important because it doesn't necessarily come into play on the actual forgiveness application in terms of the calculation. So the application does ask if you got a grant and how much, but you will notice that when you're filling out the application, the grant number doesn't come into play anywhere. From our understanding, right, I believe that
Yes.
the SBA, when they remit forgiveness to the lender and the lender tells you how much you're forgiven for is going to be net of the EIDL grant. So we put it here to make it clear where it comes into play, but it won't look like this on the actual application, right?
Right, they will subtract that. You don't subtract it on the application, but they will subtract that money.
Yep.
All right, next slide, please, Chris. Thanks. Okay, so there are actually 3 possible forgiveness applications that run across the top of this next slide. So the 3508 easy, which is obviously the easy form, is designed really for people who are not likely to have these reductions. So you cannot use if you have reductions, you can't use this form. So the salary wage reduction I talked about before and the FTE reduction. So you can't use this form. This is really for those people who don't have reductions, but more likely than not, they have loans that are in excess of $50,000. Because if you have loans less than $50,000, you're more likely to use the 3508S form. And there you get sort of like pretty much an automatic okay on this, okay? And therefore, it doesn't even matter if you have the FTE or the wage reduction type of adjustments. So here, this is just for the ones under 50. I think I saw somebody respond that they had something like $24,000. That person's more likely to use this form. And then for the other loans, ones where there are FTE reductions or wage reductions, those that are more than $50,000 and with those reductions, they're likely to use the full form, the 3508. And that has certain schedules. As I mentioned before, there are different worksheets that are used. And you have to go through the various computations, separating those people who make ordinarily less than $100,000 a year from those that make $100,000 or more, separating the owners from the other staff, and that just various computations. And it's a little bit more complicated, but it also would probably have more documentation that needs to be submitted. And at the bottom of the screen, you can see that we mentioned again that Form 3509 for those that have loans in excess of $2 million. They actually must submit the form with their application. And again, it was most likely to be the 3508 form. Okay, then the next screen, please. So let's talk a little bit about payroll costs, because payroll costs are very important here, obviously. And Chris mentioned some of this already. He mentioned about cash compensation, and he spoke about what's in there, the wages and the bonuses, etc., commissions. Also, there's vacation pay and separation pay. All these things, they go into cash compensation. He also mentioned a little bit about the paid or incurred rule. I just wanted to point out that really you're going to use that incurred rule in situations where you have the days of your payroll period extend a little beyond your normal, and they go, let's say, still within the covered period, but let's say your last full payroll was done 5 or 6 days before the end of your covered period. So you can use the next 5 or 6 days still within your covered period to accrue that, and that's the incurred rule. You can accrue it even though it's actually being paid outside the covered period. So that's normally when you would use that. Other than that, you're really using that was only paid during the covered period. So there are a few bullet points, as you can see, where you're not going to include compensation that's in excess of $100,000 on an annual basis. Again, your covered period is either 8 weeks or 24 weeks. So as you can see on the right, that the maximum amount that you can count for an 8-week period, you'd have to probably move us off the screen a little bit to see that, but it's covered. The 8-week period is 15,385, and the 24-week period, the most you can count is 46,154. Now these numbers apply for non-owners, by the way. There's a separate rule for the owners, which we're going to cover very soon. Anybody who has a place of residence outside the United States, the principal place of residence outside the United States, you're not going to count those wages either. And nor do you count any wages which a credit was allowed under the Families First Corona Response Act, as mentioned here. But I wanted to also point out, which is not on the screen, that there are also some benefits that you can include in the payroll costs that are not cash compensation, but health insurance is a good example. Retirement plan contributions that are made are also part of this. And state and local payroll taxes can be included as well. Not the federal ones, but the state and local. So that's all part of the payroll cost. And these, of course, must be at least 60% of the total spending. Now, we're finding that when people use the 24-week period, very often it's 100%, and we don't even bother with the other categories. Next slide, please. So this is about the owner compensation. I mentioned that this is a little different than the non-owner compensation limits. So the limit really, as you can see, is capped at $15,385 for the 8-week period. That's the same as non-owners. But when it comes to the 24-week period, the cap is only $20,833 instead of $46,154. So this is definitely different. And the reason for this cap being different is because when you applied originally, you had to include 2.5 months worth of payroll in your application. That's how you got to the number that you were allowed to use. And if you use a $100,000 annual amount as an overall limitation, 2.5 months worth actually converts to $20,833. So what SBA has told us is forget about 24 weeks when it comes to owner compensation. The most you can use for that 24-week period is based on 2.5 months, which is $20,833. So there, as you can see in the chart below, and we don't have to go through all the detail, the way you compute these maximums, besides these two numbers that I'm showing you in the above, there are other limitations, and that they differ based upon whether you're a C corporation, S corporation, a Schedule C individual, or a general partner. As you can see, there are certain things that you can include versus others where you cannot include. So this is something that each one will have to take a look at. We view this on every case individually. Chris, I think you're going to do the next section.
Yep. So I'm going to cover really briefly computing FTE. This is probably the biggest driver of the whole forgiveness aspect of the whole forgiveness application. And it's also one of the biggest topics we get questions on from our clients. So computing FTE, how is it done? There are two main methods. We call it the standard method and the simplified method. The standard method essentially looks at the average paid hours per person per week during the covered period. You divide by 40, because like I said before, an FTE, according to the application, is 40 hours or more per week. So you divide by 40 and round to the nearest 10th for a full-time and part-time employee. The maximum is going to be a 1.0 for any employee. So if someone averages 45 hours a week, they're going to be a 1. If they average 40, they're going to be a 1. There's also a simplified method, which is meant to do exactly as it's called, simplify the process to calculate this, because this calculation has to be done on an employee by employee basis. The simplified method essentially gives a 1.0 for employees who average more than 40 hours a week, and it gives a 0.5 or a half FTE for all other employees. So if you have someone who averaged 39 hours a week during the covered period, that person will be a 0.5. 40 or more is a 1.0. Now, the FTE reduction quotient, like Joe mentioned earlier, it essentially takes the average FTE over the covered period and compares it to one of two reference periods. And that's how it determines if there's any reduction in your headcount. Those two reference periods are February 15th of 2019 through June 30th of 2019, and January 1st to February 29th of 2020. Essentially, what you have to do is calculate your FTEs, your full-time equivalent employees, during your covered period from the February through June of 19 period and the January 1st through February 29th of 2020 period. Wherever your best ratio is, is essentially the reference period that you use. So if you look at your FTEs and you have 5 FTEs during the covered period, and you had 4 FTEs from January through February of 2020, you're going to pick January to February of 2020. You're 100% of your FTEs. So you really have to look at both reference periods and see which one is most beneficial to you. You have to look at both reference periods, and you have to calculate the FTE using standard and simplified to see where you're going to come out with the highest ratio. The one thing to keep in mind is that the method that you choose to calculate, the standard or the simplified method, has to be applied consistently for all FTE computations. So if you use the simplified method, you have to use that same simplified method for the covered period and the 2 reference periods. You can't mix and match the standard and simplified method. There are certain FTE exceptions. So what is an FTE exception, right? If, let's say you had let a couple of employees go once the whole pandemic hit, and you got PPP money, and you've been told since day one the PPP is meant to keep employees on payroll. Let's say you offered employees a job, you offer them their job back, and they decline that offer, right? As long as you have sufficient proof to show that you gave that person an offer in good faith and they declined it for any number of reasons, you won't be negated in terms of your FTE forgiveness. There are a couple of other criteria. If someone was fired for cause, if someone voluntarily resigned, or if someone voluntarily requested and received a reduction in their hours, you will not be harmed in terms of your PPP forgiveness and your FTE reduction. Keep in mind, these reductions have had to occur during the covered period. So if you let employees go, let's say you fired someone for cause on May 1st, and you got PPP money on May 5th, that person is not going to count as an FTE exception. It has to be people who left or were let go during the covered periods. That's after you got the money to the end of your 8 or 24 weeks. Finally, the PPP Flexibility Act, which was that kind of an addendum to the PPP, to the CARES Act, specific to PPP, they added certain new exemptions. So if businesses were unable to rehire an individual who is an employee on or before February 15th, or if you could demonstrate an inability to hire a similarly qualified employee before the end of 2020, you won't have a reduction. So that would be someone in a highly skilled job, let's say a welder or something to that tune, where it's hard to find qualified people. You won't face a reduction for that. These reduction exceptions, by the way, there's a little different than the safe harbor, which we're about to cover. Reduction exceptions are done on an employee by employee basis. You look at specific employees who are no longer with the company, and you treat each one separately. Reduction safe harbors are a different story. Now there are 2 different safe harbors. Safe harbor number 1 essentially says, if you as the borrower, if your business is unable to return to the same level of activity that you were at or before February 15th, due to governmental requirements or guidance issued between March 1st and the end of 2020 related to COVID safety standards, then you won't have any reduction in your FTE. Now, this is a really tricky one. Barry, I know that you have been speaking a lot to clients, specifically in the construction industry, but do you want to talk a little bit about this one and how you interpret it?
Yeah, I mean, thanks, Chris. The key thing that I personally think that the most critical area that the contractors are facing is, how does these full-time equivalent ratio affect your forgiveness? And if you had, let's say, $300,000 in payroll costs and other eligible costs during the covered period, what you would do is you would apply that factor, that full-time equivalent factor, to the amount of the cost. Let's say it's 60%, that if you had $300,000 at 60%, it'd be 60% would be $180,000 of it would be eligible for forgiveness. And if the loan was more than that, then that's what would be limited to. Now, the other one, the exceptions previously that Chris went over, reduced number accounts, either in the base or in the denominator. Full-time equivalence means that if you meet either one of these two safe harbors, then you get 100% forgiveness on your full-time equivalent. So if you had $300,000 of eligible costs during the covered period, then you would get that whole $300,000 as eligible, and you would have to compare that to the loan. So what this is doing is a lot of construction companies, a lot of HVAC companies during this period of March 1st through December 31st may have had unessential, not essential jobs, and they may have been closed due to New York City guidelines, or which were following the federal guidelines of OSHA or the CDC. If they follow those guidelines, and you can document that happened, then you don't have to have any full-time equivalent reduction, and you meet the safe harbor. And this is a very critical thing to look at, because I'm finding many of these contractors and HVAC companies may be able to rely on this to get full forgiveness for the cost that they spent, assuming it's not in excess of the loan.
Yep. Thanks, Barry. That was safe harbor number one. Just moving on to safe harbor number two. It essentially says if you reduce your FTE levels between February 15th and April 26th, and you restore your FTE levels to that same level before the end of this year, then that'll be another way that you won't have any reduction in FTEs. So look into those safe harbors. Like Barry said, safe harbor number one is very impactful, especially in this industry. Really quick, Joe mentioned it very briefly, but there are certain non-cash compensation allowable payroll costs which are eligible for forgiveness. That includes healthcare expenses, retirement contributions, and state unemployment taxes and other state employer payroll taxes. This is the portion of the employer contribution, not the employee contribution. So keep that in mind. Finally, really high level, there are certain non-payroll costs which are eligible for forgiveness. Those include mortgage interest, rent payments, and utility payments. We kind of cover this at a high level early. So just in terms of time, I'm going to continue past this. If you have any specific questions, put it in the Q&A. We're going to move on to financial statement reporting, tax effects, and the SBA process. This stuff is really critical. This is important. You want to start us off, Joe?
Yes, thank you, Chris. Okay, so many of us have to make financial statements for various reasons. And so we've had so many clients ask us, how do we treat this PPP? What do we do with this? Do we treat it as a liability? Should we be picking it up as income, something else? What do we do? And so the AICPA actually ruled on this a couple of months ago, and they did this for nonprofit organizations, but also for-profit entities. These 3 bullet points that you see at the top, they relate to what for-profit entities can do. And you sort of have a choice here, assuming you have the right criteria. So let's just go through them just to make it clear. You've got one which is saying it's debt. So that means just leave it on the balance sheet as a liability until you know that you're getting forgiven by the SBA. Okay, so once you get the notification from the SBA that you are forgiven, then you can release that much from the balance sheet and pick it up as income. A second method is called the government grant method, and that allows you to recognize this deferred income upon receiving the loan, but only as expenses are actually being incurred that qualify for forgiveness, assuming that you have reasonable assurance that you will be forgiven. So as you know, payroll is a big part of this. We've said this many times, and some people will use rent and utilities and maybe mortgage interest. If you believe that you are going to be forgiven for all or part of it, then to that extent, you can start to ratably pick up income as you spend it. So if you're doing a financial statement, let's say of September 30th, and you have at that point spent 2/3 of the money that you were supposed to get, and all of it is forgivable as far as you can tell, you actually have the right to pick up 2/3 of the SBA loan as income at that point. So that's something you can do in your financial statement. And I'm going to go over reasons why you would use that. And then the third point is called the contingency method. And this is really just what you do here is it's kind of like the first one, but actually all you really need to do for this is to record a note in your financial statements. You don't even have to show it as a liability if you don't want to. And so that's another method that you have. It's very much like the first one in the sense that you don't pick up income until it's released. So naturally, for tax purposes, the first method, and I guess the third as well, they sound like really good because you don't have to pick up the income right away. Well, tax is not that way, and Barry will cover that later. But for financial statement purposes, you have this choice. So you might want to take a look at that middle one, because there may be a reason why you want to pick up income earlier. First of all, your bank loan, you may have a bank loan that has covenants that you may need to meet, and having liability is not necessarily good for you. You may want to be able to pick that up as income instead. And here's another reason. Maybe you're thinking about selling your company. Maybe there's an acquirer out there and you want your financial statements to look as good as possible. So you might want to pick that up as income, or as much as you can over that period, as much as income. So this is a judgment call. And so what we've been doing is working with clients, figuring out their situations and seeing what's best for them. All right, Barry, maybe talk about the taxes now. That'd be really appropriate this time.
Yeah, this is probably one of the hottest areas in the in the laws and discussions right now. What happened was when the CARES Act originally passed in March, it specifically had a provision in there, and the provision stated that to the extent that that any amount of the loan of your PPP loan was forgiven and you didn't have to pay it, then that would give rise to what they call non-taxable income. And everybody loved that idea, because if you got a $400,000 loan and the bank is forgiving it by reason that the SBA is paying for it, that $400,000 of loan that would normally, under the tax laws and the general tax principles, be taxable income, is now non-taxable income. And that was a huge benefit to many companies, and many companies have planned accordingly. Then back in June, the IRS came out with a notice, and it said in the notice that to the extent that you were going to get forgiveness on that monies, or PPP money, then those expenses that you used for that forgiveness amount, it's not deductible. And that created a lot of hoopla with government, the federal government. It created a lot of hoopla in the public arena. It created a lot of hoopla with tax people and also businesses. Because what happened was they said that if you had $400,000 of PPP money and you used that $400,000 in PP to pay covered expenses during that period, payroll, and you got that $400,000 of that loan forgiven, now what they're saying is you're no longer getting those income tax deductions on the $400,000 of payroll that was used to fund the PPP money. There was a lot of conversation, and just recently in November, the IRS came out with a ruling 2020-27 that reiterates the same point that they came out in June. And they said that there's no deduction allowed. And what they also said was the following. Then a lot of people were raising the question, is it not deductible in 2020, 21, when you get forgiven? Because maybe I'll hold off applying for forgiveness until next year, or maybe even the year after that. And they came out with, in this revenue ruling, they basically said, to the extent that at the end of the year, December 31st, that whether you applied for forgiveness on the full $400,000 in my example, or you intend to apply and you reasonably, and the borrower reasonably expects that these expenses are going to be forgiven. You don't know that for a fact, but you're reasonably doing that because you're putting it on your application and you're asking for forgiveness. The IRS came out saying that the 2020 expenses are no longer deductible. Okay. And just to give you a little example, if you had an HVAC company that had $4 million in revenue, and let's say they had $3.75 million of payroll and overhead expenses, and they had net taxable income of $250,000. If they got a $400,000 PPP money and that $400,000 is being forgiven, and let's say they apply for forgiveness in January and it gets forgiven in May or June of next year. If you, at the time, the borrower reasonably expected that $400,000 to be forgiven, in your 2020, in the 2020 tax return, of the $3.7 million of expenses, $400,000 of that's not deductible. So you're creating what they call this phantom income in 2020. So you got to be careful, because right now we're doing year-end tax planning for many of these businesses, and trying to get a handle on how much they're going to expect to see in the PPP forgiveness. Now, the reality of it is you don't know if you applied for forgiveness now, you may not hear back from the SBA and the bank until May and June. We don't know. We really don't know the SBA. So there's a Rev Proc 2020-51 that says that deals with what happens if you didn't get the exact amount that if you anticipated 400 and they came back and they said 375 is forgiven, how to handle the other $25,000. You could do it on an amended return, on the originally filed return, and so forth. The other piece is New York State, New York City, and Connecticut and New Jersey decoupled from the CARES Act. And what that means is it's following the tax laws that existed prior to when the CARES Act became law. So the forgiveness piece is going to be taxable income, which means that the expenses we're anticipating is to be fully deductible. So what you'll see if you had the same situation of a $400,000 of expenses that would be not deductible for federal purposes in 2020, you will see that they're fully deductible for New York State and city purposes. So there's a lot of calculations that we're doing, and we're actually running two different year-end plannings, one being non-deductible. And right now in Congress, as a matter of fact, they even just checked at 5 o'clock or 4 o'clock before this started, what happened in Congress, because Congress is looking at a CARES Act too. And there's two bills that are being negotiated right now. One, where the expenses are going to be, they're going to overturn this revenue ruling and make the expenses deductible. And there's another group of people in Congress that are saying, no, we're going to leave it the way it is, non-deductible. So we probably will find something out in the next couple of weeks to see if these expenses are deductible or not. But just keep your eye on that. That's hot news in the press. Now, if these expenses are not deductible, that's in effect what the Secretary of Treasury alluded to, is the government paid for these expenses, not the business, even though so you shouldn't be entitled to those expenses because it got forgiven. So this has other implications to a lot of these contractors. This company, a lot of contractors qualify for these qualified business income deduction, a 20% deduction. That's a function of how much money you made, but it's also a function of how much payroll you have. And if you lose that deduction for payroll, we don't know if you're losing that same deduction for QBI purposes. And also, a lot of HVAC companies qualify for research and development tax credit. And the question is, if the government had some of this payroll costs forgiven, then does that reduce your R&D costs because it would be funded research? And also, if these expenses, payroll expenses, are no longer the company expenses under this thing, how does it affect your percentage of completion calculation? Because right now, a lot of companies have, I'll call it book percentage of completion. You may have tax percentage of completion, but now you may have a third percentage of completion, PPP forgiveness. So all of these things are raising a lot of issues, creating a lot of difficulty in year-end tax planning. So I'm saying to all my clients and my contractor friends, year-end planning is very, very critical because some people are seeing a larger tax bite than they anticipated. Next slide, Chris. Okay, so now let's talk about the process of actually applying for forgiveness and what a borrower can expect. Okay, so as we said before, the forgiveness can be filed up to 10 months after the covered period. Now, if you file beyond the 10 months, you're going to have to start making the principal and interest payments. And if you get full forgiveness after that, then you'll get it refunded by the bank to you. But the first step is you open up a portal. The banks have a lot of portals, and you submit the information through the portal, and you'll be submitting the loan application, the forgiveness application. And we kind of went over which application you use, okay? So the next step is the bank or the lender has 60 days from receiving a complete application to review your application and decide whether or not you will get some or all or partial forgiveness. The bank must make the determination based on your eligibility and your calculations. They may ask for additional information. And once they do, they're supposed to give you an answer within 60 days. In certain situations, situations where the bank may feel uncomfortable giving an answer, they may go and ask for forgiveness and ask for the SBA to give a ruling on it. And in that case, the SBA has 90 days to review the application and conclude whether or not you got forgiveness. Now, the technical rule is the bank's actually lending you money, and they're actually using their own capital for funding the PPP loan. So they're going to before they give forgiveness, they want to be assured that the SBA is going to reimburse them for the money. So after they hear from the SBA that they got full forgiveness or partial forgiveness, then the SBA will give its ruling to the bank. And then the bank will notify the borrower of how much is the forgiveness amount, some, whether it's partial or none of it. And once you have that, we highly recommend to retain these records for many, many years, 6 years. We're recommending borrowers to retain these records because the SBA has the ability to review your records for 6 years. So we're telling borrowers to retain these records for 6 years. Now, this is all part of the timeline for processing it. Now, there's a lot of other considerations to do. Next slide, and let's have Joe go over some of these other considerations. Joe, you're muted.
Yeah, sorry, I was muted. Yes. So in the interest of saving some time, because we're actually running over a little bit, I want to try to just look at this as a review and say, yeah, there are some real good reasons for choosing 8-week versus 24-week, most especially the FTE reduction and perhaps even a wage reduction. You got to look at that if you borrow prior to June 5th. And I want to also mention that there's the supporting documents that you would have to submit. It's very important that this is done thoroughly and properly. So you got to be really good about keeping good records and making sure that you're backing up all your numbers. Then the next section about calculating the FTEs, just as a reminder, Chris went over this, that there are 2 methods. You got to see which method comes out with the better one. And got to take a close look at those safe harbors, because that could really be a home run for you if you can qualify through the safe harbor. Obviously, this is a lot to do. Some of this is very technical, so you might want to work with an advisor to make sure that you go through the calculations and the safe harbors and documentation, tracking of all this stuff. It's a lot of work. but your advisors should be able to help you with this. Certainly, if you don't have an advisor, you can call on us and we can probably help you there too. So last thing I want to say on this slide is that your lenders, there are many lenders out there, and the procedures among the banks who are primarily the lenders, they vary very from one to the other. So they're going to be announcing when their portals are open. The portals are going to be different for each bank. So make sure you're aware of what your lender has been put out there, and you might want to make a contact before too long. All right, Chris, you want to bring us home, please?
Yep. Finally, last minute or so here. In terms of where Janover come into play, we're helping clients in multiple ways. We're assisting with calculations to help them maximize forgiveness. We've developed an internal model to assist our clients in this way and basically provide them with the full package of everything they need to submit in terms of forgiveness. And then, you know, the second tier, we are just reviewing applications or helping clients prepare. So we're able to plug in wherever our clients need us. That's our presentation for the day. We want to just thank everyone. I know we want to open it to questions, right, John? I think if anyone has any questions, I don't know if you want to take everyone off mute or if anyone want to raise their hand. I think we left a couple minutes here at the end for that.
There was one written question which I wrote back on, but some people may have just been holding off till the end. Okay.
Yeah. So I mean, feel free to take down our emails, everyone. Take down our office number here. I could speak for both Barry and I. We're happy to answer any questions that anyone has. Feel free to shoot us an email. We're very open with kind of assisting people with questions here and there.
Guys, I want to thank you very much. It was an excellent presentation, and clearly it's a to be continued type of thing, right? So it looks like the next couple of weeks might give us a few more answers.
That's for sure.
What's going on? Okay.
Absolutely.
Thank you once again. Have a good night, everyone.
Thank you.
Thanks, everyone.
All right.
Thank you.
Bye.